Gold and silver both had 52-week highs. Gold is now over 4,100 an ounce, and silver has cracked 50. Folks, is this a message? Is the smart money trying to tell us something that is coming? Is the dollar is having its worst year since 1971? Is this just a road to zero? We're going to have this conversation with a 12-year Wall Street veteran who works with the top 0.1% of the wealthy in the world. And we're going to find out what the heck they're saying, what he's saying, because maybe it's something you and I could do. Taylor, what's going on, man? I can't believe gold's at 4,100 and silver's over 50. What say you?
Yeah, I don't think anyone had this on their bingo card 2 years ago. It has absolutely ripped from a nuclear perspective. I think there's some clear-cut reasons behind it. I think it's the first thing that is glaring right in folks' faces is what happened with the U.S. and how they interacted with Russia upon Russia's invasion of Ukraine 2 years ago, 3 years ago, whatever it was now. I think that was the big sideswipe to all foreign banks throughout the world to say your assets are not as safe as you thought they were in the U.S. Treasury.
Yeah.
So that's and so just if you want me to add some meat on that.
So let me kind of play that out. So again, I think this might have been it might have been 4 years ago. It seems like it's been going on far too long. But yeah, we basically confiscated Russia's dollars that were held in the U.S. We said, "Oh, sorry, we're going to keep those."
Yeah, we froze them. So we didn't necessarily just outright take them, but we said all those dollars that you have, all of that U.S. Treasury investment that you have, you are no longer able to just withdraw that money and take it back to your end.
So, what we've seen happen over the years is I'm going to guess, foreign countries were the largest buyer of U.S. Treasuries pre that event, right? Collectively, right? They bought the most. And you're right. What that told, various leaders is, if we ever do anything bad, or even, if they perceive us to do something bad, they can just confiscate them or freeze them, as you say. And that really changes allocations, right? Where a country might have been allocating, say, 80% of their excess to U.S. Treasuries, now it's going to be 20%, or, heaven forbid, zero. So, that's a big deal.
Yeah. And so the other logical place for them to park those assets becomes gold. Hey, what do I have that I trust over the long term and does not have the political kind of biases that take place in the U.S. Treasury? We'll buy gold. And now for the first time since 1996, I believe, you have foreign governments owning more gold than they do U.S. Treasuries.
I saw
which
that.
is it's kind of a shot across the bow on us. And it does. It makes it a political battle as to, I mean, obviously, if someone's buying a U.S. Treasury, it is a buy into the stability of the U.S. economy. That's at the end of the day what you're buying: the stability of our government, the stability of our economy. And when we start to make decisions that are detrimental to foreign entities because we don't agree with their political stance, that starts to draw questions. And that's exactly what happened, and that's exactly why you had money move from treasuries to gold and saw that explosion of price. And then there's a couple other, reasons I can layer on top.
Yeah, well, I think we need to go into that further because again, this Russia-Ukraine thing, it has to be at least 3 years. But it does. This seems.
Yeah, I think it was like February, March 22. So yeah, 3.5 years, I guess it would be now.
But it seems to be almost going parabolic, right? Because again, we did that 3.5 years ago, but we're seeing a move this delayed. Yeah. I mean, what's going on?
Yeah. I think that's a function of some of the other things that are now starting to get layered on top. And I think that what we're seeing is basically a global race to devalue currencies. I think that you have central banks around the world just pumping, flooding, doing every mechanistic thing that they can on the fringe to not tell their citizens that they, Trump and our government, our government and Trump says we want a strong dollar, and in effect they want a weak dollar, right?
Yeah.
No one's going to say that because it puts them in a bad light, but at the end of the day, a weak dollar helps our competitive nature from an export perspective.
Yeah, and again, the dollar is having its worst year since 1971, down 20% or something to that. And is it? I guess the question I have as a Wall Street veteran, this seems almost like a parabolic move at this point, and those generally don't end well. Does this seem to be getting long in the tooth, or Is this more like early Bitcoin, and this is just like, the world has changed, and these assets are just being repriced, every day, and it's only going to go one direction for a while? Any thoughts?
Yeah. Yeah, I think that we have to have the realization of where we came from too. So the last few years we had been in a ultimate booming bull market for the US dollar. The US dollar just
Mm.
strengthened across everything. Even when we had high inflation in the United States in 2022, the highest inflation we had seen since 1981. I know this is hard to conceptualize. Like, inflation's really high, meaning the dollar's not that strong, but against global foreign currencies as a basket, it was ultra strong, and it strengthened through last year. So we're giving back a lot of kind of that overheated momentum on the dollar. But it'll be interesting. I don't know. I don't claim to be someone, you know, forecasting currency and forecasting interest rates are probably the two hardest things from
Yeah.
a macro perspective to forecast. And it's, yeah, people get made look very foolish by both those two things.
Yeah, well, we're having more and more legends of Wall Street kind of change their allocation, right? I think it was Ray Dalio recently said, from 3 to 5% to 10 to 20%, right? What are you telling your client? And are your clients even asking? Are your clients talking about gold and silver? But
They
what's
do.
going on kind of at that level?
They do. And so the route that we've taken with our clients is actually a way to take a lesser exposure, but have it be more impactful. So the reason why gold is such a powerful piece of an overall portfolio construct is that when you think about the economic cycle, you think about kind of four main functions of the economic cycle. You go from growth to inflation to stagflation to weak growth. And the asset that most folks come to us very overweight in are stocks. And stocks work incredibly well during growth. They can work well during modest inflation, but not nasty inflation like we saw in 2022. So now you have an inflationary period where stocks can, stagflation, no bueno, and recession or weak growth, very bad, right? And what gold does is actually excels in all three of those.
Mm.
And so the way we took exposure through gold, which started 18 months ago or so now, was actually through gold miners.
Oh,
And
nice
there's a
play.
few,
Yeah.
yeah, there's a few reasons. And I want to make it sound like we just knew that they were going to go, nuclear. That
Hey, when
wasn't
you
it.
call it right, celebrate a little, man. Come on.
Yeah, we'll take it. We'll take it. But more of it was a portfolio construction conversation. Hey,
Mm.
we want some assets in place. They're going to hold up well at times when other assets struggle. And so that was the play on miners. And the reason we took miners as opposed to taking gold is two or threefold. So the first thing is just from a tax perspective. So in a taxable account, miners are taxed as a stock. And so therefore you
Mm.
hold it more than a year, it's 15% or 20%, whatever your long-term capital gain is. Whereas gold is taxed as a collectible, which is a 28% tax bracket,
Oh, I
which
didn't know
very
that.
few people know. So the tax lens, by the way, when you compare a good advisor to a bad advisor, the tax is generally, the biggest
Yeah.
component of what people are doing wrong. So
Wow.
that's that. The other thing is you can take a more muted position in
Mm.
miners than you can outright in gold and still have it have the bigger impact because miners have basically what they call a beta of 3 against gold.
Yeah.
So gold moves up or down 1%, miners are going to typically move up or down 3%. So it cuts both ways. Let me be clear.
Yeah. But what you're really telling me is you've had a good 18-month run. That's what you're telling me.
Yeah. Well, the last reason that we felt really confident in miners at the time was that about 18 months ago, you had gold initially hitting its all-time high.
Mm.
Obviously, it's just gone to further and further all-time highs. But at that time, you had miners at about a 33% discount to their all-time high.
Ah, buying at
And
value.
so
I
it was a
like it.
point of dislocation there. And there were some reasons, right? Labor costs were relatively high. Oil costs were relatively high. But at the same time, we thought that was more pronounced than it would have appropriately been. And so therefore that was, all those reasons caused us to move into the miners, not into the gold. And that's worked out
Yeah.
incredibly well.
Really, really well. Well, I was going to take a right turn on you now because the other asset that's been booming recently until Friday, it had a nasty washout, was crypto.
Yeah.
And, Friday's call on tariffs, which now has been muted because, she had a bad day, according to Trump. So again, we're going to, Taco Monday is on. The taco trade is in full effect this morning. But I want to talk about crypto because again, it's still shocking to me that so many people are in that game levered. And when you have a bad day, a record drawdown, I don't know what it was, like 79 billion or something stupid in in minutes.
Yeah.
What Why are people on so much leverage, Taylor? I don't get it.
Yeah, let's take the most volatile asset class and crank it with a couple shots of steroids in the ass, and let's ride that, right? Listen, I'm not a pro or an anti-crypto person. I just think it's important to say what crypto is, because I think there's just so many false narratives in the market. So I don't see it as this inflationary hedge. I don't see it as anything other than the ultimate form of a risk asset. Like in 2022, we had nasty inflationary pressures, the worst we've had in 3 decades. Crypto's down 62%. Bitcoin's down 62%, right? So it's fun to talk about these narratives, but if you overlay Bitcoin with the S&P 500, or even a closer correlation with the NASDAQ, they correlate incredibly tightly. It's just a form of risk asset that's amplified versus what the broad stock market is. So if the stock market's up, like, expect crypto to be up, but more. If the stock market's down, expect crypto to be down, but more.
Yeah, again, folks, again, not being a pro, right, pro or con kind of crypto investor, but please own your stuff, right? Come on, own your stuff, have tight stops, whatever it is, because again, if we're going to have lots of days like this, or you're going to have lots of days like this, going in 3, 4, 5, 10x levered is stupid. It's suicide. You'll eventually get caught.
It can ruin you. That's the reality, is it can ruin you. And the last thing you want is that I get that if you don't own it right now, you have FOMO. I don't own it right now. I've owned it in the past, right? I wish that I continued to own it to this point. I'm not over my heels in love with risk assets right now, just at valuations where they are. So therefore, I like crypto even a little bit less than high risk stock assets. And so with that, and to be clear, like, I often talk about things on social media, et cetera. And I talk about, hey, some challenges that might face the stock market, and people, react like I'm not in stocks. I still have like a huge exposure to stocks. It just, I have pared down some. Yeah. So anyway, yeah.
Yeah, it's pretty crazy. Well, if somebody wanted to reach out to you and see what you're doing for clients now, because again, you're constructing portfolios, helping them manage this crazy environment, how do they reach out?
Yeah. So you can go to lifegoal.com, lifegoalinvestments.com/introduction, or you can go right to our social media pages. Our social media pages have a link right there. Click on it and set up a one-on-one call right there.
Yeah, folks, I would go to Instagram right now, go to Life Goal Investments. He puts out these 60-second clips that have 10 minutes of value. Subscribe and click the link and you won't be disappointed. Thanks, Taylor.
You're the man.